Something massive is happening in the silver market right now. Most people have no idea what is coming. But by 2026, this could hit your wallet harder than you think. Silver just broke records in December 2025. The price shot past $60 per ounce for the first time in history. This is not a small jump. Silver has doubled in price this year. It went from around $30 at the start of 2025 to over $60 in just 12 months. This is the best performance silver has seen since 1979. That was 46 years ago. Back then, the world economy looked very different. Now history is repeating itself, but the reasons are completely new. The numbers tell a shocking story. The world is running out of silver. Not slowly, fast. Right now, there's a deficit of 117 million ounces in 2025. This means demand is beating supply by a huge margin. This is not a one-year problem. This marks the 5th straight year of silver shortages. 5 years in a row where the world used more silver than it produced. Think about that. For 5 years, we have been eating into existing stockpiles. Those stockpiles are getting smaller every single day. Mine production is going down. Silver mines around the world produced about 900 million ounces back in 2016. That was the peak. Since then, production has dropped by more than 7%. In 2025, global mines are expected to produce only 835 million ounces. Why is production falling? Mines are running out of high-quality ore. The silver that is easy to dig up has already been taken. What remains is deeper underground and harder to extract. Many old mines have closed down. New mines are not opening fast enough to replace them. Central and South America face the biggest challenges. These regions produce most of the world's silver, but they are dealing with resource depletion, infrastructure problems, and rising costs. Some major mines have shut down completely. Starting a new silver mine takes years. It costs hundreds of millions of dollars. Companies need permits, equipment, workers, and time. Even if mining companies decided today to open new silver mines, those mines would not produce metal until 2028 or later. By then, the shortage will be much worse. Now let us talk about demand. This is where things get really interesting. Silver is not just for jewelry and coins anymore. Today, silver has become critical to modern technology. It is the most conductive metal on Earth. Electricity flows through silver better than any other material. This makes it essential for electronics, solar panels, and electric vehicles. Solar panels are eating up massive amounts of silver. Every solar panel needs silver paste to convert sunlight into electricity. Nothing works better than silver for this job. As the world pushes for clean energy, solar panel production is exploding. In 2024, the photovoltaic sector alone used 29% of all industrial silver demand. 10 years ago, it was only 11%. This demand is still growing. Countries everywhere are installing more solar panels. China is building solar farms that cover thousands of acres. Europe wants to reduce dependence on fossil fuels. Even developing nations are embracing solar power. Each solar panel might not use much silver, but when you multiply that by billions of panels, the numbers become staggering. Electric vehicles are another massive driver. Every EV needs silver in multiple places. Battery management systems use silver. Power electronics rely on silver contacts. Charging infrastructure requires silver components. Even the electrical wiring inside EVs contains silver. The Silver Institute predicts automotive silver demand will grow at 3.4% every single year from 2025 through 2031. That is a compound annual growth rate. Car companies around the world are switching from gasoline engines to electric motors. This transition is not optional anymore. Many countries have announced they will ban new gasoline car sales by 2030 or 2035. Every electric car that rolls off the assembly line needs silver. Millions of EVs are being produced each year. This number keeps climbing. Beyond solar and vehicles, silver plays a vital role in artificial intelligence and data centers. These facilities need massive amounts of computing power. The servers and electronics inside data centers use silver for reliable connections. As AI technology expands, more data centers are being built worldwide. Industrial demand for silver hit a record 680.5 million ounces in 2024. That is the highest industrial use ever recorded. And experts expect this trend to continue through 2026 and beyond. Here's the problem. Industrial users must have silver. They cannot wait for prices to drop. Solar panel manufacturers need silver paste right now. Car companies need silver components today. If they stop production, they lose money fast. So they buy silver no matter what the price is. This creates intense buying pressure. Industrial buyers are competing with investors. Both groups want the same limited supply. Speaking of investors, something big changed in 2025. For years, silver investment funds saw money flowing out. People were selling their silver holdings. But in 2025, this reversed dramatically. Exchange-traded funds that hold physical silver saw huge inflows. Investors poured money into silver. They bought silver coins, bars, and certificates. This buying added fuel to the price rally. Why did investors suddenly want silver again? Several reasons. First, central banks around the world have been cutting interest rates. When interest rates fall, keeping cash in the bank becomes less attractive. People look for other places to store wealth. Silver becomes appealing because it holds value during uncertain economic times. Second, geopolitical tensions are rising. Trade wars, political instability, and international conflicts make people nervous about traditional investments. Precious metals like silver and gold act as safe havens. When the world feels dangerous, people buy silver. Third, inflation fears are growing. Even though inflation has cooled from its peak, prices for food, housing, and energy remain high. Silver historically protects against inflation. When currency loses purchasing power, physical assets like silver maintain their worth. The combination of these factors created a perfect storm. Industrial demand is skyrocketing, mine supply is falling, investment demand is surging. All three trends are pushing prices higher at the same time. Now let us look at what experts predict for 2026. Major banks and financial institutions have released their forecasts. Bank of America expects silver to climb to approximately $65 per ounce by 2026. They predict an average price around $56. Other banks are even more bullish. Some technical models suggest silver could stretch towards $70 or higher. The average forecast from major banks places silver in the $56 to $65 range for 2026. But some analysts think even these numbers are conservative. A few bold predictions suggest silver could eventually reach $100 per ounce. This might sound crazy, but the math supports it. If the supply deficit continues for another year or two, prices must rise. That is basic economics. High prices are supposed to solve shortages. When silver costs more, mining companies should produce more. Investors should sell their holdings. Demand should decrease, but this is not happening with silver. Mine production cannot increase quickly. Opening new mines takes too long. Existing mines are already producing at capacity. Even with higher prices, supply remains stuck. On the demand side, industrial users cannot easily reduce consumption. They need silver to make their products. Finding substitutes is difficult or impossible in many applications. Solar manufacturers have tried to reduce silver content in panels, but there are limits. Silver just works better than anything else. This means the market imbalance could persist through 2026 and possibly beyond. Every month that passes with a deficit makes the situation tighter. Some analysts warn about a potential short squeeze. A short squeeze happens when investors betting against silver suddenly have to buy it to cover their positions. This creates panic buying that sends prices soaring rapidly. Several market watchers believe conditions are right for this to occur. Physical silver inventories at major exchanges are falling. The London Bullion Market Association has seen its stockpiles decline significantly. When physical metal becomes scarce, lease rates spike. This is exactly what has been happening. Silver lease rates reached levels not seen in years. What does all this mean for regular people? Why should you care about silver prices? Even if you do not own silver, these price increases will affect you. Silver costs show up in many products you buy. Electronics become more expensive when silver prices rise. Solar panel installation costs go up. Electric vehicles cost more to manufacture. If you own silver jewelry, its value just increased significantly. Silver coins and bars in your possession are worth much more than they were a year ago. For investors, the question is whether to buy silver now or wait. Some people think silver is already too expensive after doubling in price. Others believe this is just the beginning of a much larger move. History provides some perspective. In 1980, silver briefly spiked to $50 per ounce during a speculative frenzy. Adjusted for inflation, that would equal about $180 in today's money. We are nowhere near those levels yet, but the 1980 spike was driven purely by speculation. Today's move is driven by fundamental supply and demand. That makes it more sustainable. The industrial demand story is real. The supply deficit is real. These are not rumors or hype. They are documented facts supported by industry research and government data. The Silver Institute is the industry's main research organization. Their annual World Silver Survey is considered the authoritative source for market data. Their numbers show the deficit clearly. Multiple independent analysts confirm these findings. Countries like India are also playing a role. India is one of the largest silver consumers in the world. Cultural traditions there create strong demand for silver jewelry and coins. When Indian buyers increase purchases, it puts additional pressure on global supplies. Trade policies and tariffs are another factor. Changes in international trade rules can affect silver flows between countries. Recent policy shifts have created some disruptions in normal supply chains. The clean energy transition is not slowing down. Governments worldwide have committed to carbon reduction goals. This means more solar panels, more wind turbines, and more electric vehicles. All of these need silver. Artificial intelligence is expanding faster than most people realize. AI requires enormous computing resources. Every new data center built increases silver demand. Tech companies are investing hundreds of billions of dollars into AI infrastructure. Even if some applications find substitutes for silver, new uses keep emerging. Medical technology uses silver for its antimicrobial properties. Water purification systems use silver filters. 5G telecommunications equipment contains silver components. The list goes on. Looking at the bigger picture, silver has been undervalued compared to gold for years. The gold to silver ratio measures how many ounces of silver equal 1 ounce of gold. Historically, this ratio averaged around 60 to 1. Recently, it was much higher, meaning silver was relatively cheap. As silver catches up to gold, significant price gains are possible. Some economists point out that silver is both a precious metal and an industrial commodity. This dual nature makes it unique. During economic booms, industrial demand drives prices higher. During economic uncertainty, investment demand provides support. Silver wins either way. Volatility is worth mentioning. Silver prices can swing dramatically in short periods. It is not unusual to see silver jump or drop several dollars in a single day. This volatility creates risk, but also opportunity. For 2026, market watchers expect continued volatility. Geopolitical events, economic data releases, and central bank decisions will all impact prices. But the underlying trend appears to favor higher prices based on the supply-demand fundamentals. Retail investors have noticed. Coin dealers report strong sales of silver eagles, maple leafs, and other popular coins. Online precious metals dealers are doing brisk business. Some products occasionally face delivery delays due to high demand. Mints and refiners are working hard to keep up with orders, but they face their own challenges. Blank silver must be sourced, then processed into coins or bars. When spot prices rise quickly, mints struggle to manage inventory and pricing. Industrial users are getting nervous. Some companies are increasing their silver inventories to protect against future shortages. This defensive buying adds to current demand. It also reduces available supply for others. The question everyone asks is whether silver can maintain these high prices. Past bull markets eventually crashed. Will this time be different? The fundamental difference is that previous silver spikes were largely speculative. This time, real industrial demand provides a solid foundation. Solar panel production is not going to stop. Electric vehicle manufacturing will continue growing. These are long-term trends, not short-term fads. Of course, unexpected events can always change the picture. A global recession could reduce industrial demand. New mining discoveries could increase supply. Technological breakthroughs might create substitutes for silver in some applications. But right now, none of these seem likely in the near term. Economic growth continues in most regions. No major new silver deposits have been announced. Silver's unique properties make substitution difficult in critical applications. Central bank policies will remain important. If interest rates rise again unexpectedly, investment demand might weaken. If rates stay low or fall further, precious metals become more attractive. Currency instability is another wild card. If major currencies experience problems, people flee to tangible assets, like silver. This could create sudden demand spikes. For now, the supply squeeze is real. Mines cannot produce enough silver to meet growing demand. This imbalance is not going away soon. Unless something dramatic changes, upward pressure on prices should continue into 2026. Your wallet faces a choice. Higher silver prices mean more expensive electronics, solar installations, and vehicles. But they also mean silver investments gain value. Understanding what is happening helps you prepare. Whether you buy silver or not, this market transformation affects everyone. The metal that has been overlooked for decades is suddenly in the spotlight. Supply is vanishing. Prices are skyrocketing. The silver squeeze of 2026 is not a prediction anymore. It is already happening. What you do with this information is up to you. But ignorance is not bliss when markets are moving this fast. The wake-up call has already sounded. Those who hear it early have time to respond. Those who sleep through it may wish they had paid attention. Silver's moment has arrived. 5 years of deficits have depleted stockpiles. Industrial demand shows no signs of slowing. New supply cannot materialize quickly enough. All the ingredients are in place for prices to climb even higher. By the end of 2026, today's prices might look cheap, or perhaps the market will find equilibrium at these elevated levels. Either way, the silver market has fundamentally changed. The quiet metal that lived in gold's shadow is now stealing the show. Your wallet should pay attention. This is not just about investors making money. This is about real supply running out while real demand keeps growing. That combination always leads to higher prices. Always. The silver squeeze of 2026 is your wake-up call. Consider yourself warned.